Welcome to Markets Now. I'm Michelle Rook along with John Payne with HedgePoint Global Markets, and a mostly higher day on Monday. And John, let's talk about kind of the star of the day, soybean meal getting above 500, closing above it, and new contract highs. How much more upside do you think we have in that market with these South American production concerns?
Well, 530, 540 would be the all-time highs that I think we saw in 2012, if I'm regarding 2013. And I think that's the concern level. But I don't think we'll see it in this calendar. I think we'll see it once it gets into the new crop, or I'm sorry, into the first notice day period. So the next 2 weeks, we have really three full trading weeks until the first notice day on these March contracts. And I think that'll be a nice little gleam into what's going on behind the scenes in the cash space. Out west, we have strong basis in corn. And then you have the South American story in Argentina. Argentina is the #1 bean meal exporter. They're tight on supplies, not just because of their droughtness, the problem with their crop. It's due to currency. The farmers there are not selling it to the crushers because they'd rather hold the beans than the Argentinian peso. So a lot of dynamics here at hand. The next 2 weeks should be pretty wild.
And January, we got above the January high is what I'm trying to say there in the March soybean contract. We couldn't close above it. Do you think we take another shot if soybean meal stays strong?
I do. I think especially if the harvest in Brazil stays slow, you could see a little squeeze there where the Chinese need to come in, fill some orders, combined with maybe a shorter order flow into the first notice day. You have crush margins at $2, $3, depending on where you are. I mean, there's massive profits to be made even if prices would go up $1 or $2. So I don't think we're going to see that type of action, but in my opinion, the markets here have a lot of upside priced into them that are not priced in. I think volatility costs being very, very low, especially on the corn side. If there's a surprise and it comes from that SEP contract in corn, you're going to see some broken hedges out there. So be careful.
Yeah. And speaking of corn, March again got up into that 685 area. We couldn't take that out, and so retraced below it. That corn market tries to follow soybeans. If soybeans keep going, though, into those contract highs, does it eventually have to follow, or what happens?
Well, I think the beans have, the idea that bean crop, the harvest is going to be high. I think I've been to 8 shows this winter, and every single one of the corn speakers I listen to has a pretty different number in regards to acres. So I think over the next week and a half here before the Ag Forum, we see some kind of pricing in of supply, and then I think the product markets take over come first notice day. I think the corn markets are intriguing here. You've got really strong basis out west, and you've got U.S. that's the cheapest in the world. This is the first time we've seen this really since the summer. So U.S. supply is priced to move. We have, I think ethanol margins that could pick up substantially if energy prices would pick up like they do tend to be higher into Memorial Day than they would be at Valentine's Day. And I think you have an overall economy that is staying hot, and we should see that with the with the inflation numbers on Tuesday and Thursday. So I'm a little bullish here on the front month contracts specifically. I think longer dated contracts you can make some case to being a seller, but I think at this point the buy side has work to do, in my opinion.
Yeah, we got to get exports to pick up here, though, it looks like. So. Yeah,
for sure, and watch the meats, because we're exporting. We could export grain, or we could export it through the meat side.
True.
And I think the European prices, especially in hogs, have gone up pretty substantially here. And I think you could see the U.S. pick up some business. So, it's hard to say how high we go in summer hogs. I'd like to think we see the same levels we did a year ago. Cash prices are somewhat similar. So I wouldn't be short in the June contract here below 100, that's for sure.
So the wheat market has had a pretty nice rally here. We've gotten above some chart resistance points there. How much of that is pricing in Black Sea export concerns, and how much more will we need to price in, do you think?
Oof, that last question's a big answer. I would say that U.S. premium over a certain levels is what you want to watch here. And the U.S. prices got $4 over the Russian prices at the maximum of the levels, or at the maximum of the volatility last spring. I think right now we're trading somewhere north of like $160 a metric ton, which I think is closer to three and some change. So there's more to go.
Okay.
I think that KC wheat, you can make the case, July specifically, is like way overpriced on the export side. You're like almost 40% higher than what's Russia's charging the Middle East. So, that's the easy sell to me. But you have those concerns that I think could really run any market higher on Black Sea war. And if the U.S. has to become an exporter, our prices will certainly need to adjust, but that'll come from the other side, meaning the competition gets more expensive.
Cotton market up today. We did see a drawdown in the acreage survey by 17%, but is that what that market's really trading?
No, I think the market's trading right now, developing market exposure, reopening of COVID. I think when the China markets, when there's optimism there, cotton's going to do well. When optimism doesn't exist in the emerging markets, cotton's going to be a poor trade. I think one thing we've got a wild card is this Turkey Syria earthquake. Turkey is a pretty big miller. They do a lot of the European business, and so we're hearing 30% maybe closed right now just due to this earthquake, and who knows if it'll ever come back online. So I think that's a story in the longer term to kind of examine. But short term, March delivery. Again, if you're looking to watch some fireworks here over the next couple of weeks, keep an eye on those near dated contracts. They should be fun to watch, especially after first notice day. That should provide a little key to what the May contracts may do.
And new contract highs in the nearby live cattle again getting pushed by cash. And, everybody wants to know, are we just going to continue to kind of grind higher here?
Yeah, 165 on the April. We're 172 on the April 24. So we basically have a new contract high, the highest contract we've seen. Now,
wow.
The market hasn't gotten too wild yet on the feeder side. We've gotten price increases on all these deferred contracts, but the front month's still pretty steady. So we're counting on that to happening. In what month? That's a good guess, and I think that's where, if you're long feeders, it's very difficult because you could lose money and still have the market go higher. These deferred contracts are priced so high right now relative to where the cash is.
Absolutely. All right, thanks so much. That is John
Thanks,
Payne
Michelle.
with HedgePoint Global Markets and Markets Now.